morning. Welcome to IG's Early Morning Call. It's Thursday, the 20th of July. Let's take a look at the headlines as we await the start of today's European session, where we're looking for gains here in the London markets once again after a 24-hour market performing very strongly yesterday. The Dow Industrials also one of those markets where we're seeing some outsized gains compared to others across Wall Street, but we'll take a look at those in just a moment. All this comes as we've seen the US dollar continue to see some downside, and most notable downside has been against the Aussie. The Aussie is rising against that weaker US dollar. We've seen some labour market strength coming through today with some jobs data in the Australian economy. And those US earnings, they continue to dominate. Yesterday we saw declines for Tesla, for Netflix, for Alcoa. We did see some gains for United Airlines, which was an outstanding upside performer. But outside of that, it was a poor evening last night. Let's look at volatility. We are up for a second day, currently trading at 1614. Now, this is really all about the markets easing back into some of the gains that we've seen. And if you look at what's happening here in the London markets, we're just bumping up against this 200-day moving average. We pierced that yesterday with the upside candle wick that we got, and we ended down off the highs yesterday. If I show you a 30-minute chart, what I can do is I can import this here to show you where we closed out yesterday's session. So we are actually where we closed out yesterday's market at 75.90, around about that sort of thing. But this London market has really been a big outperformer. And that was all as a result of the inflation data we saw yesterday and people re-rating their ideas about the outlook for UK rates. Insofar as what we've got across the European markets, let me just quickly tell you in the context of what we got for the German economy, in the markets at the moment and the economy, economists are now looking for 25 basis points up from the ECB in July. A slim majority of economists now expecting another 25 basis point rise from the European Central Bank in September. Now, there's certainly expectations the Bank of England is going to raise rates next time it goes out, which is in a week or two's time. But thereafter, I suspect there will be another 25 basis point rate rise coming here in the London markets as well. French markets, you can see when all was said and done yesterday, despite the fact we saw a really big punch up at the start of yesterday's session on the back of those inflation numbers here in the UK, the number that you can see here, the really big pullback in the French markets, we actually ended pretty much where we started out yesterday's session. We're down at the moment on the 24-hour candle, down at 73.16, expecting a slightly lower start when things get underway at the top of the hour in the French markets as well. Overnight in Asia, let me just quickly run through what's been happening there as a bit of a backstory. TSMC, Taiwan Semiconductor, one of the biggest semiconductor manufacturers in the world, profit down 23%, but it beat forecast, but the stock didn't really move an awful lot. Just want to quickly run through what we got here with the Nikkei 225 down 1.2%, but outside of that, it's all been about the recovery in the Hang Seng stock index. This market has been down heavily recently since that poor Chinese data out at the beginning of this week. And of course, we saw one of the cash sessions out this week because of the typhoon on Tuesday, I think that was. The Hang Seng stock index in today's session making a small recovery on from the recent losses. ASX 200, little change on the day, but it does go in the history books as a day of gains, a small rise as at the close. Let's take a look at what we've got in terms of Wall Street, because that was really where some of the extended action happened last night. And it was really all about what went on for the Dow Jones Industrial Average. In the end, we saw it up, as you can see there, up by a margin of 1/3 of 1%. I want to show you the 24-hour markets in the context of what I was talking about yesterday. Look at the candle yesterday. We ended off the highs, but in fact, we were up at closing at levels there. Not seen in this market. The last time we saw those closing levels were back on the 21st of April 2022. And you can see we punched higher to a new recent high. In today's session, we actually have a red candle now, but the bottom line is that we're pretty much holding on to the recent rises that we've seen for the Dow Industrials. And as you've just seen, the Dow was the outperformer yesterday, despite the fact is we got the NASDAQ as well intraday yesterday at levels there not seen since the 13th of January 2022. And then came the pullback. In fact, subsequent to the market close last night, which is why we got this big red candle here yesterday. And in fact, if I can show you what's going on in the 1-hour chart, I can just show you where the horizontal is as at the close last night, because the NASDAQ stocks, we saw declines yesterday post-market for the NASDAQ share price and also Tesla. Sorry, NASDAQ, Netflix, I beg your pardon, also Tesla, which saw this drop late in the session last night. And you can see on the 1 hour chart, we've got another little bit of a drop at the moment on the NASDAQ on the 1 hour chart. So the daily chart, it is just a small retracement in what is otherwise a market which continues to rise. Insofar as levels to watch out for, we're currently trading at 15,742. This is an interesting line to break. You can see we've seen two touches on this on the upside when it became resistance. That was at 15,285. So I think if you get a candle print at a close below there, I'm then looking potentially for further losses. But I'd want to see it pull back down to this sort of 14,500 level before I really become concerned and might then consider putting a longer term short trade on this. But you look at this, it's a phenomenal rise, 52% up from the 13th of October last year. And as we've been reporting, if you take this into where we were at the beginning of January this year, that was the candle there where we started out the session. We got a 45% rise for the NASDAQ so far this year. That is a phenomenal run in this bull market, this little bull market that we've got at the moment. We're not as high as the record highs that we saw back in November 2021. But oh boy, has it been a really good run. But the problem is the breadth is very, very, it was narrow because we've got a small number of really big stocks that are making all the difference. The Apples, the Microsofts, the Teslas, the Netflixes and so forth. I'll cover more detail on that in just a few moments' time as to what happened last night, where we've seen a little bit of air taken out of the tires of both Tesla and Netflix. But nonetheless, it has been a very narrow breadth of stocks that we've got, which are leading the NASDAQ up. Now, let's take a look at what's been happening overall in the night time for those monitoring what's going on in the foreign exchange markets. The Australian unemployment rate stood at 3.5% in June, below market expectations at 3.6%. So more jobs. Full-time employment climbing by 39,300. Part-time employment falling by 6,700. The balance, 32,600, easily surpassed market forecast of just 15,000 jobs having been created. Now, as a result of this, and in the context of a slightly weaker dollar, it has been a pretty good day, actually, for the Australian dollar. Let me just show you what's been going on here. Let me take that fib off first of all. You can see actually we've got a candle body pretty much matching the negative candle body that we saw the previous day. We saw a drop of the Aussie. So it is just rebounding. We have been above this line of resistance, or this support resistance line at 68.18, which were the highs we saw back on the 10th of May. It's difficult to know where it's going to move next, but basically it's been a pretty good day for the Australian dollar. Later on today, initial jobless claims in the States. Expectations are there for 242,000. Existing home sales forecast to fall by 1.2% in June, month on month. Ahead of that, I want to show you what's going on with the euro-dollar trade, which in the last few days has peaked out at this line up here. Let me just take that down there. I was talking about this yesterday in terms of a potential short trade, or a retracement rather, not a short trade, but a retracement. I was saying if you were short on this, your stop would go above the top of the fib. So you'll stop at around about the 113 level if you're short on this. And indeed, in yesterday's session, you made a bit of money, but then has come a little bit of a fight back at the moment. Euro is up against the US dollar at 112.13. Next line of support to watch out for on the downside is this 110 level. Got that data out later on in the States to watch out for at 130 today for weekly jobless claims. Let's take a look at what's happening in terms of corporate UK and Australia, because we're going to talk about a stock which trades in both regions. BHP Group said overnight that its iron ore production from Western Australia reached 72.7 million tonnes, a touch lower than the anticipated figure. Like Rio Tinto yesterday, BHP warning about what's going on in the market for the rising costs, which we've got. I want to show you the BHP chart for one-day candles in the Australian markets. It is currently up 0.18%. So potentially, is this going to be a market where we could well see gains in the London market at the start today? To be frank with you, it's not a particularly big move, so we're not expecting anything in terms of fireworks at the start of today's European session. easyJet, meanwhile, trading update for the quarter ended 30th of June 2023. Record third quarter pre-tax profit of 203 million. £317 million improvement on the loss that we saw in the third quarter of 2022. Passenger growth up 7%. Revenue per seat, now this is interesting, up 23%. I say interesting because they're able, obviously, to bring in more revenues. Load factor up 2 percentage points year on year. Now, the interesting thing is they don't actually give a full load factor figure. So we don't know what that's risen to, but we're suspecting potentially it's nothing like the 90 plus figure, that 92, I think it is, percent for Ryanair. And of course, they don't really want to highlight that. But nonetheless, it is all going in the right direction. Ticket yield per passenger up 22%. Now, that is good news. And that potentially could be one of the reasons why we see a possible rise at the start of today's trade for easyJet at the beginning of the session today. The stock will open at 495.4 pence. It just yesterday closed above the 50 and 100 period moving average. The next line to watch out for is this line of resistance we got here when we went into that head and shoulders, inverted head and shoulders pattern at 545. We're opening at 495. Certainly, I think if you're looking for a stronger start, your stop goes down here to around about the 480, 475 pence level if you're going long on this stock at the start of today's trade. The ancillary yield per passenger is also up. Ticket yield per passenger up. 950 million pounds worth of debt repaid during the third quarter, and all looking pretty good, possibly for a stronger start for that stock at the beginning of today's trade. Let's just quickly run through some of the other companies. This is Dunelm. Yesterday, very strong day in the market, ending at £11.13. Full year profit expected to be slightly ahead of market expectations. That is a positive warning, if you like. 6% sales growth in the fourth quarter. Digital sales making up 39% of total sales in the quarter. That's 2 percentage points higher than this time last year. But there's a challenging consumer environment, the company warning about the outlook. Nonetheless, it is expecting a good figure for the full year preliminary results. That stock, as I say, closing yesterday at £11.13, which is where it will open today. If you're long on this stock, goes underneath the 200-day moving average down here at around about the £10.50 level. I want to stay on the charts again, take a look at what's happening with Premier Foods. Another one worthy of a quick nod at the start today. Strong first quarter numbers. Full year trading profit expected to be at the top end of market expectations. First quarter group sales up 21.1% against the prior year. Branded sales up 17.5%. All these metrics looking really good. Mr. Kipling, he makes exceedingly good cakes apparently, delivered record market share in Australia and continues to build further distribution in the US. New categories. Progress continues according to the company. Ambrosia porridge, Cape herb and spice more than doubling. So there are aspects of this business it's just bringing onto the books which are doing really well. Trading profit now expected to be at the top end of expectations. I suspect this could be another stock where we could well see a gain at the start today. It'll open at 127.2. If you're long on this stock, goes down here at around about the 121 pence level. The streaming giant Netflix ended with shares down almost 9% all sessions on the IG platform last night, even though earnings per share came in at $3.29, better than the $2.83 expected, even though the streaming giant added 5.9 million subscribers between April and June. Investors were a lot more interested in the top line, revenue rising 8.19 billion, but that missed expectations of 8.27 billion. Revenue forecasts were also disappointing. At Netflix, forecast third quarter revenue would hit $8.5 billion. Wall Street had been forecasting $8.7 billion. And that, I think, is the reason why, when you look at this chart, you see that big red candle on the right-hand side, which is where this all-session stock ended out yesterday's trade. This stock will be down around about 7 or 8% at the start of today's cash session in the States. While the company added subscribers, it said the average revenue per member fell 3% from this time last year. That was partly because many of the new signups came in countries where Netflix charges lower prices. Netflix said its advertising tier, that's the lower charging tier, remained a small part of its membership base, and that current ad revenue was not material. But the stock was down heavily in extended trade last night on the IG platform. Tesla shares were down almost 5% in extended trade late last night, not on the release of earnings. It all came when Elon Musk stood up to talk at the press conference. Let's take a look at earnings first of all. These are better than expected for both the earnings per share and sales. Earnings coming in at 91 cents per share and revenues of 24.93 billion. Street anticipated EPS of 79 cents and revenues of 24.29 billion. But look at what happened late in the session for that stock after rising earlier on the trading day and indeed after the markets closed last night, showing a 143% gain from the point at which we started out the year. Then came the tumble. Elon Musk press conference commenting on Tesla's past quarter. Musk said he would cut prices again, even after Tesla's margins have already been squeezed. Tesla's quarterly automotive gross margin fell to 18.1% from 19% in the first quarter of this year. Now, that was in line with street estimates, but way below the 26% it reported this time last year. And as a result of that, we saw a loss of 4.67% in extended trade on the IG platform last night. Look for losses at the start of today's trade on the cash session on Wall Street for Tesla. In among some of the other companies on the move last night, I want to talk about IBM. Now, it barely moved on the release of its second quarter earnings. I want to show you the numbers. Earnings per share come in at $2.18. Analysts expected $2.02. Revenue, $15.5 billion. We've been looking for something like around about that for the revenue figure. The stock did actually fall in extended trade last night, but it got supported by the 200-day moving average at $134.05, which is where it ended out yesterday's trade, looking like it could see a little bit of softness today in the cash session when that opens. Let me take a look at Alcoa. Stock losing 1.17% after release of Group 2 quarter earnings. Loss per share came in at 35 cents, but that was better than the 52-cent loss expected. Revenue broadly in line. I want to show you the all-session stock on the IG platform. First of all, it rose. You can see this with that long wick on the right-hand side. Then it fell. The stock ended down 0.2%. Another all-session stock was United Airlines. Look at this. In fact, that stock rose and, in fact, ended up all sessions on the IG platform with a gain of 3.3%. The stock ending up at levels there not seen since June 2021. This after its positive second quarter and a positive outlook as well. The stock benefiting from more people wanting to fly as more people return to the air after COVID-19. A couple of all-session stocks due to report today. American Airlines, are we to expect the same thing there that we saw on the UAL chart last night? American Airlines expectations are for earnings of $1.56 on revenues at $13.72 billion. And Johnson & Johnson, the street there expecting those earnings before the bell today of $2.62 billion, $2.62 on revenues of $24.67 billion. Now let's move on to other areas of the market. Let's bring up a chart showing you what happened yesterday with crude oil inventories, just to show you what's been going on there. Last week fell, according to the EIA, of a margin of 700,000 barrels last week. Gasoline stocks fell by 1.1 million, while distillate stockpiles are virtually unchanged. I've been watching the price of oil, interestingly, recently. It's not really moved an awful lot with this band. Let me just quickly draw you where the band is at the moment. If we look at the share price, or the price chart for US crude, there we go. It's been topping out of the 200-day moving average at 77.17. 73.82 is the bottom here, just in the last week or so, and looks like we're holding on to yesterday's losses at 75.23. So far as gold is concerned, that's the only other area of the market I think of interest. That's lifted again. And in fact, in today's session, we've seen a new intraday 8-week high. No, make that a 9-week high now at 1980. So this channel continuing to trade higher. I was talking about this yesterday, talking about the direction of travel. I was saying if you're long on this, your stop goes under the underside of this rising line of support. If you wanted to take a short position, you put your stop above the rising line of resistance up there, so your stop over the 2000 level. And that's where gold is at the moment. That's it from me. We're back at 10:30 with Charting the Markets with Sean this morning, taking you through some of his choices on some of the technicals to watch on these markets as we see a continuation that rise the price of gold. I suspect Sean, who quite often talks about gold, will be talking about that in the 10:30 release this morning. Ahead of that, do watch out for the stocks to watch at the start of today's trade, including those figures out today from Dunelm, from easyJet, and also from Premier Foods.